Investing is an amazing concept that's allowed people to make millions and in some cases even billions of dollars. But a lot of people will look back on their investment career and think about the early days when they first started investing and wish that they knew so much more information about investing that they now know. So in this video, I'm going to be talking about 5 things that I wish I knew before investing. Let's get right to the video. So if you guys are new here to the channel, you don't really know what it's about, I talk about all things investing with my tips, tricks, and insight into the stock market. So if that's something that interests you and you're looking to increase the size of your portfolio, then make sure you jump down, hit that subscribe button, and turn on the bell notification so you can be alerted when new content comes out. I post a ton of different content that you're definitely not going to want to miss. And like I said, this video is mainly going to be talking about what I wish I knew before investing, just so my strategy would be a little bit better and my returns would be a little bit higher. So I'm just gonna hop in and cover number 1 right here, and that is time is your most valuable asset. So as an example, I want to talk about this. Say you're 25 years old and you think, $50 is not that much money to invest and there's no point in investing it if that's all you can save. Well, that $50, by the time you turn 65 years old and you're ready to retire, that $50 is now worth $1,900 based on historical returns from the stock market. So imagine if you were able to invest just $50 a month, and then the next month you were able to invest another $50, and the next month, and so on and so forth. You can really see that this money will start to add up super quick. So even if it's a very minimal amount of low value that you don't think has an impact, it really does have an impact. And that's something that you need to understand from the get-go when you start investing. And that's something that I wish I knew, because there were times where I had money in hand and I would just spend it because I thought, it's not going to have that much of an impact on my portfolio, when in reality it totally does. And the best thing is I'm still young, so I'm not even at that 25-year-old range. So as a 23-year-old, the more money I'm able to put away now, the more time that it will have to grow and accrue interest in the stock market. So that's something that I aim to practice what I'm preaching moving forward with my portfolio. Now, the second thing that I want to be talking about is when you first start investing, penny stocks don't usually work out too well. So funny that I say that, because the first time that I actually invested in a penny stock, I was able to take $500 and turn it into $1,500. And with that happening, my mentality just clicked, and I was thinking, there's no way I could lose on a trade. I was able to do this my first trade. I'm invincible. I'm not going to lose any money. And what do you think happened? Yeah, I proceeded to lose all of that money that I had invested. So luckily, $1,500 in the grand scheme of things isn't too much for my portfolio as I'm still young, but it was important for me to learn that lesson early on. And I think most people come into investing thinking they're the next Timothy Sykes. They can turn a couple $1,000s into millions and millions of dollars, when this actually is not the case. So that's something that I definitely wish I learned earlier on. Now, the next thing, which kind of ties into that, is just that buying and holding is the way to go. So a lot of times you hear the terms investing and you hear the terms trading, and differentiating the two is very important, because when I think of something that you're investing in, it's like you are putting your money into it, you're buying part ownership, you want to be a part of that company for the future because you see a lot of the different value that they have to offer, and you think that they're going to be doing well over a longer period of time. Now, when you hear the term trading, I think, okay, this is just what I'm trying to swing, make a couple bucks here and there, not really investing for the long term. And that's the thing. For me, I'm focused on investing. I want to find those really solid companies, the ones that are going to provide value over the long haul, ones that I don't have to worry about, and ones that I don't have to be trading, so to speak. So that's definitely a term that I wish I knew the difference of a little bit earlier. If you are a beginning investor, definitely look into, there's different trading strategies and there's different investing strategies. I would urge you to focus on investing if you're brand new, because a lot of times if you're going to be trying to swing trade, day trade, do all these different trading styles, it's not going to boast well for you. Now, the fourth tip that I want to cover for you guys is to not have a what's called herd mentality. So if something's really popular, for example, Bitcoin got up to $20,000. Investors were flocking at it left and right, coming in from all angles, just throwing their money at this, even when it was as high as $20,000. And then it crashed. It went all the way back down to $4,000. I mean, it is hovering right around, I think, $8,000 right now, $9,000 maybe. But the point is, that was super risky for all of these people to do, and a lot of people didn't really understand the technology, and I feel like a lot of the investors still don't understand the technology behind Bitcoin, and I myself don't fully understand it, so I can't be one to speak to what it is exactly, if it's going to be super beneficial for us or not. I mean, it could be the next big thing, but investing based off of speculation because of popularity, it's not going to end well for you. So something else that I wish I knew, and this could tailor into you if you just get a new job, if you're starting working for the first time, you got a full-time position, right? And your company offers a 401k match. Now, according to several reports, about 20% of Americans actually don't invest enough money into their 401k. They're not contributing the proper amount. And one of the reasons for that is, as you're a new hire, a lot of different 401ks will just start you at a 2% or 3% saving rate, when that's not necessarily what you should be saving. You should really be focusing on saving as much as you can, a lot higher than 2 to 3%. One of the reasons why you might want to do this is because your employer might actually match you up to a certain percent, like 5%. So there'd be no reason for you to put anything lower than 5% into your portfolio, because you're essentially turning down free money in that case. So for example, if you are on a $60,000 salary and your employee match is set at 5%, if you stuck with what the 401k originally started you with at 2%, you'd be turning down about $1,800 per year. So those are 5 things that I wish I knew a little bit earlier when I had first started investing. Basically, I wish I wasn't so hesitant to get into the market. So if this video did help you at all in any way, make sure you hit that like button and then subscribe to the channel if you want to see more content just like this. Thanks for checking out the video, guys. Have a great day.